Well, all right, we'll go ahead and kick this thing off. Thank you, Ayal. Thank you, Bryant. Thank you, everyone else who's joining us. I'm Jake Alexander from Action Accounting. If you're joining us here on this event, you probably already know who I am, but I got some really special guests with me here today. I got Bryant Sells and Ayal Karmali, and we're going to talk about Franchise 101. So if you ever thought about growing your current business through franchising, or if you've ever explored maybe going out on your own and purchasing a franchise, we're going to cover a ton of useful information for you today. In typical accountant fashion, we've got to do a little overview, just a little bit of an agenda, kind of what we're going to cover with everyone today. So we always like to start with intros. At the end of the day, the presentation's not about us. It's about the content and the education. But I always think it's nice we're not some perfect strangers up here talking to you all today. So we do a little bit quick intros, just a little bit about your host. From there, I want to talk a little bit about what's new in the tax world. Like I said, today's event is all about franchising. That's the meat. That's the majority of what we're going to discuss and cover today. But there's some major updates going on in the tax world. They had this whole One Big Beautiful Bill Act that's now officially signed into law, which has major changes for businesses, major changes for individuals. And so if you're not 100% up to date or you're not aware of a lot of the things going on there and how that can affect you, we'd love to have a conversation and we'd love to guide you through that. Our event last month was actually on the topic of the whole tax updates for 2025 because of the One Big Beautiful Bill Act. So we recently posted that on our website, or if you want to get a replay of that, we'd love to provide that with you too and answer any questions there as well. There's deadlines coming up, which in the tax business is just kind of part of the territory. So September 15th is the business extension deadline. We got to get those business tax returns filed for 2024. October 15th is the individual extension deadline for 2024. So we got to get those business and individual tax returns filed and out of the way so we can move forward to planning for 2025. Specifics, the majority of what we're going to cover today is all about franchising. We're going to talk about the good, we're going to talk about the bad, and we're going to talk about the ugly. And then we've actually got a special guest. We have Ayal Karmali here, who has actually successfully franchised his business. They have multiple locations here in Florida and up north, I believe, too, right, Ayal?
Indiana, yeah.
And they're looking to expand all over the country. So we're going to hear some firsthand experience from him about a little bit of the good, the bad, and the ugly. And then, of course, we always build in plenty of time in our program for Q&A for questions at the end. Just a little bit of housekeeping to make sure everyone knows how to ask questions. This is the webinar version of Zoom. It's not like the typical version of Zoom where everyone can come off mute and ask questions and all that kind of stuff. We try to keep it as organized as possible. And so we do want to hear from you. We do want to interact with you throughout the program. The way you do that is with that Q&A box that's down there in the bottom. So as just part of a quick check, audio, video, everyone find that Q&A box if you wouldn't mind, or at least a couple of you, and type in your first name and type in where you're from. That way, I know everyone can hear us. We're not just talking to ourselves for the next hour out here. And then we know everyone knows how to go in there. So at the bottom, it should say Q&A. You might have to go all the way to the right and hit that more box, but it should say Q&A there, and it should come up, and that is how you'll interact with us. So Chris from Tampa, hey Chris, having a good day. Thanks for joining us. That's how we will interact with you throughout the event. We got Tom from California, Sanjay from Land O'Lakes, Charbel from Los Angeles, a couple people from California. That's awesome. Charbel, always a pleasure. Good to hear from you. Thanks for joining us. But that's it. So a little bit of housekeeping stuff. We do want to interact, but type in your questions there. We'll make sure we answer all of them before the end of it. Or if you have a question that's pertinent to whatever it is we're talking about at the time, don't be shy. Throw it in there, and we will interrupt our speakers and answer it on the spot. So, all right, that's just a little bit about what we're going to cover. Quick introductions. Whoa, my first guest here we have is Bryant Sells. I want to bring up his website. So, Bryant, how you doing today?
Doing great, Jake.
Bryant, thank you so much. Well, yeah, thank you so much for being here. I wanted to bring up your website so everyone gets a little familiar with you before we jump into the content. And I want to introduce you here. Bryant Sells is he's a good friend of mine. I've known him for quite some time, but he's also a seasoned entrepreneur and advisor. He helps people achieve business ownership and successful exits. He's owned and operated multiple franchises on his own for nearly a decade. From there, he transitioned into franchise consulting with Apex Franchise Consulting, and where he guides entrepreneurs towards the right franchise opportunities. He also works as a business broker, so it can help you sell your business as well and maximize that value when it is time to sell. And so I know, Bryant, you got a background in marketing. I know you got years of hands-on franchise experience yourself. What I think is great is you bring a practical, results-driven perspective to business growth investment in transitions. So welcome. How you doing today, Bryant?
I'm doing fantastic, Jake. Thank you for that very kind intro, man.
Look at that. Look at that. You got a lot to live up to now. So I
I'll do
teed you
my
up
best.
perfect. So that's Bryant. We've also got Ayal here today. Ayal, how you doing this afternoon?
Very good. How are you?
I'm great. I'm going to bring your website up here, which it's going to make me a little hungry. I'm going to try to not get distracted. But Eyal Caramelli is the co-owner of Pasta di Guy, which brings, he personally brings over 30 years of leadership experience from the tech industry. He's a born entrepreneur. He opened his first ice cream parlor before the age of 18, then owned 2 restaurants by the age of 21. 5 years ago, he joined his son, Guy, at Pasta di Guy as the CFO. You guys are driven by a strong belief in the brand's concept of offering gourmet food at family-friendly prices. Today, you combine your business acumen and lifelong passion for food to help grow Pasta di Guy through franchising into the eatery of choice for families all over the U.S. So, Eyal, thank you so much for being here. I'm excited to hear from you a little bit later in our program here. And the
Yeah,
food looks
thank you for having me here.
yeah, the food looks phenomenal, I gotta say.
It is.
It is, right?
Signed. It
No-
is.
Yeah, Brian, no, Brian tasted it.
Yeah, it's really
nice.
good.
Nothing to be shy about. I love that.
Yeah.
And just for me, like I said, if you're here, you probably already know who I am. But Action Accounting is the name of our business. We've been around for 10 years. We've got a team of 8 of us at this point with clients pretty much spread out all over the country. We've got 4 main departments. We have a bookkeeping department, tax prep department, tax planning department, which is where I spend a majority of my time. It's where we help business owners put strategies in place to legally and morally pay the least amount of taxes as possible. We've also got a business consulting department where if you're looking to build and scale and grow your business, we can help you put systems and processes in place to do that as efficiently as possible. And so that's a little bit about introductions. I'm going to hand it over to Bryant here, and we're going to pop right into some content. So, Bryant, if you are ready, I'm going to stop sharing my screen. I'm going to let you share. And as long as we can do this efficiently and not shut down our whole program, I'll let you take over and go from there. So,
Yep. Cool. Can everybody see that first slide?
we got it.
Cool. Perfect. So yeah, franchising 101. Let's jump into it. Just a quick overview about what I'm going to discuss. Well, we already did a little bit about our hosts. Investing in franchises. I want to debunk some myths and discover how to figure out the right industry and brand that's for you. Franchising is a lot more than food, even though a lot of them are food. It's a lot of different industries are represented there. And then third, scaling your business through franchising is another piece of the franchising puzzle that I like to speak about frequently, and I help several clients with. Scaling through franchising is a fantastic way to leverage other investors' money to help achieve your dreams and your goals. First off, why do people invest in franchises versus starting your own business or investing in a established non-franchise business? People buy franchises because it's a predictable, well-established business model. Creating a business model is a lot more than creating a document. It takes time, it takes trial and error, it takes a lot of experience. And that's really one of the core things that franchisors bring to the table. Many people think you invest in a McDonald's just because everybody knows about McDonald's, but in reality, it's about a strong, repeatable business model. For example, Pasta di Guy and Eyal, him and his son have figured out a very consistent way to recreate high-level scratch food at a affordable price. Not an easy thing to do. It takes a lot of experience and knowledge in order to build that business model out and then teach it to the next person. So one of the key reasons on why you would want to invest in a franchise business model versus develop your own is a lot less time, trial and error in order to get to your goal of an efficient, predictable business model. Brand recognition is part of the deal when you invest in a franchise as well. Obviously, everybody's heard of the Wendy's, Bell's, Chipotle's, brands like that. And it can be a very powerful tool in your inventory when you launch a business. When you bring a brand into a community that people already resonate with and recognize, you're going to get a massive leg up over the competition. So part of it is brand recognition. the proven systems and the support, and I'll lean into that support part. Investing in a business coach is not cheap. Investing in getting the support that a franchise offer is an expense. And when I talk about franchising and royalty fees, you should be getting a equitable return on the amount you're spending out to get back in your help for running your business. And a big part of that return on your investment you're getting is the support. It could be marketing support, it could be IT support with proprietary built CRM systems and customer acquisition systems. A lot of it is coaching support. I really can't emphasize enough, especially as a novice entrepreneur who may be leaving the private sector, a W-2 job, and getting into your very first business venture. Having coaching and proper support from people who have done it before is critical. I always joke with people, if Tiger Woods needs a coach, if LeBron James needs a coach, if Kobe needed a coach, trust me, you need a coach as well. It's important, no matter what level of expertise you have, to always have that confidant to talk to, bounce ideas off of, and have that iron sharpening iron type of situation. And lastly, being able to leverage an existing model versus having to start from scratch is another one of the key reasons people invest in franchise opportunities. Like I mentioned earlier, starting a business from scratch sounds easy, but putting something down on a paper versus bringing it into life and executing on that business model is a pretty huge difference. So that's that first slide.
I think,
People,
Bryant, real quick, not to interrupt you, but if I could jump in, just one of the biggest things, I worked in corporate America for 10 years prior to leaving and going and starting my own business. And one of the things that just blew me away is we didn't have access to reports like we did at corporate America. Like, when I worked there, I got reports every day on what we sold, what got returned, what kind of money was coming in, what kind of money was going out. And then when I went on my own, I think that was one of the most surprising things is like, what do you mean I don't have all this robust reporting stuff easily at my fingertips? I'm sure that's something that comes up for these people. Would you say that's accurate?
100%. If you can't have KPIs and you don't have quality reporting and you can't track anything, you can't track, you can't improve upon for sure. So reporting is critical for large organizations and small organizations. And as you pointed out, Jake, it doesn't just come out of thin air. Those reports have to be generated somehow. You could leverage third-party software like Power BI or whatever, but it's very helpful when it's already perfectly catered to the exact industry and business model you're executing on, which is definitely one of the key things a quality franchisor will provide for you is excellent reporting.
Great.
Yeah, appreciate that input, Jake. And I'll quickly go over a couple of these common misconceptions. Franchising is not passive. It's a business just like any other business. You just have a business partner and a franchise agreement dictating how that relationship is governed. You can reach passiveness in franchising, but it's something that is earned, not given. So you have to build a team. You have to build your own processes within your space in order to get that passive stream of income. It's just fast food. Like I mentioned in my beginning of my speech, there's over 100 plus industries that franchising exists in. Food definitely dominates franchising, but home services, health and wellness, fitness, senior care, law firms I've seen franchise. So it's a wide gamut of opportunities in franchising. You don't need millions of dollars to get into a franchise. Many opportunities start at under 150K. A lot of the brick and mortar concepts, even like Pasta di Gai, you can get into for 250 or less as well. So, and just like a car or a home, you normally don't buy a franchise cash. You can get an SBA loan. The SBA will lend to a franchise startup where they will not generally lend to a non-franchise startup because of the established nature of the business model. So accessing capital is a little easier with a franchise. Just like any other business, there is no guarantees in business. Franchising is not guaranteed success. Franchise owners fail all the time. You need to educate yourself. You need to be prepared. You need to have contingency plans. So don't naively step into that and bet it all on red, thinking it's a guarantee, because it's not. You got to take it serious. You got to run it like a professional. And last misconception I hear frequently is royalty fees are a ripoff. This honestly can be true in a bad franchise model, but that's why it's helpful to work with a franchise consultant such as myself to help you avoid poorly run models that are effectively taking your royalty money monthly and not giving you an equitable return on your investment in terms of coaching and processes and reporting. So do your research, make sure you join in with the quality franchise system, and that royalty fee is money well spent. Did you want to add anything, Jake, before I kept going on?
I just want to say, I see no, you're doing great. I just want to say, if you just joined us, I saw we had a couple more people pop in. You want to utilize that Q&A box. If you do have any questions, we'd love to answer those throughout the program. Also, we got time here at the end too. So, and I guess just, yeah, one quick question, Bryant, is there any industry that you specialize in? So you say it's not just fast food. There's all kinds of different industries. Is there any specific ones that you're a little more comfortable with, or kind of all over the place?
I would say the home service is a space that I focus on quite a bit. The margins tend to be a little better, not across the board, but generally in the home services. It's also, they usually come in at a little cheaper price point than a lot of the brick and mortar concepts as well. So I do tend to focus on home service concepts quite a bit.
I know I hear kind of through the grapevine, there's a ton of roll-up activity and private equity activity going on in home services and healthcare and a couple of other industries at the moment too, right?
Oh, 100%. Private equity is a huge factor in franchising, just like in most industries at this point. And they are all over the place in the home service space, HVAC, plumbing, roofing, you name it, they're there. Private equity does tend to invest in franchise business models as well. So I would say one other point on that is if it's a younger brand, there's a good chance that private equity is going to come in and invest with them at some point down the line. So if you want to make sure you're working with your future partner, you may want to buy into a franchise model that's already partnered with private equity, so that you don't buy in and then the owner sells a year later and now you're working with a completely different team. So just be conscientious that they do buy these franchise systems out frequently and can cause sudden changes in ownership for your partners.
Yeah, and then I would imagine it's totally different from an operational standpoint. The minute they take over, of systems and processes are probably getting a lot tighter from that minute forward, I would assume.
Absolutely, absolutely. Equity injection, 100%. So processes, things like that, generally get better. The main thing you may not like is the culture. The culture will shift. Franchises are heavily your experience in a franchise is heavily dictated by the culture that's created by the Zors, the franchisors. So if you fell in love with hanging out with the old owners and you love the way they ran things, it can be a slightly different culture. Not bad, just different a lot of times once private equity comes in.
Yeah, no, that's great.
Yeah. So just quickly go over how the process works for myself. Initial consultation, just getting to know you, your goals, your needs, your finances, how much you're willing to invest, educate you about what's available on the market, what are royalty fees, what are franchise fees, what's a franchise agreement, what's an FDD, talk about all the terminology that you're going to come across. At that point, I get into brand matching, bring up maybe 5 to 7 opportunities. We discuss them. And if you see something you like, I connect you with the franchisors and begin the actual discovery process. And one quick point about the discovery process, one of the most important points is what we call validation, where you get to talk to existing franchisees and they get to give you the good, the bad, the ugly, what they like, what they don't like in the franchise model. They can share their profit and loss statements, when they broke even, and all those details you're going to want to know. So important piece of that discovery. And then it's decision and due diligence. You just do your due diligence the best that you to your ability. you meet their team and you decide to go forward or not. But that's kind of how that franchise acquisition process works.
Brian, if I could ask real quick, not to interrupt you, but I'm taking notes and I got questions and stuff over here too. So could you talk a little bit, and maybe you'll cover this, if you will, feel free to just go forward and get to it when you were going to get to it. But could you talk a little bit about like the financials needed for somebody who's looking to, there's two sides of it, like, purchase a franchise. And then if somebody thinks their business model's ready for franchising, what kind of P&Ls and balance sheets, cash flow statements are they going to need to provide for that part of the process?
Well, if you're purchasing a franchise, chances are you aren't or not, you probably had a W-2 job or whatever. So it's really net worth. If your net worth is 250 and up, there's quite a few opportunities out there in that 150 or lower range. If you want to invest in $1 million franchise and your net worth is 300, they're not even going to offer it to you. So getting to understand what is my net worth is a good first step if you're thinking of investing. And at that point, look at your assets, look at your equity on hand, and do your pre-work with figuring out if you can get qualified for an SBA loan. That's really the key, is where are you going to get the money from? Cash, friend, family, a bank is usually where people go. Sometimes they do home equity or from a retirement account like a Rob's 401k, but all of them are viable options. But knowing where you're going to get the money from, if you're going to convert your business into a franchise, your numbers for your existing locations or business is certainly important, because it's going to have to get discussed when you're talking to the future franchisees you're selling to. If you can't show that your business is making a profit, why would anybody invest in that, of course? So that's probably the best key for converting into a franchise, as well as just having a good stream of income and quite a bit of cash, not a ton of cash, but a good amount of cash on hand. It
Cash
is
reserves, right?
right, reserves, because it costs money to build a business, to scale a business. And the number one reason franchisors tend to fail is they just run out of money. So having a couple units open, producing money for you will certainly help, just so you know your personal bills are paid and you can keep the train moving.
And have you ever come across somebody who has a great business, they're excited, they know they have this opportunity to franchise it, but then, let's say their financials aren't as crystal clear as they need to be, like they're not broken down by location, everything's running up into one P&L. That's probably going to cause issues, right?
Oh, of course. And if I could say anything to any entrepreneur in any scenario, is please hire a bookkeeper. Come on, and I'm
Hey, there
sure
we
you
go. We
can
like that.
appreciate that advice, Jake. But just hire a bookkeeper. I know it's tempting, unless you have an accounting background, just hire one. You're going to be able to sell the business much better. You're going to be able to present you just get a bookkeeper. That's all I'll say about that.
I love it. I love it. We do have a
Yeah.
question here. It's about compensation, which if you don't want to get too much into, we totally understand, but it's really like, how are you compensated in these transactions, Bryant? And, maybe you could walk through, like, what are some of the advantages of using you or somebody like yourself compared to just going through the franchisee directly?
Yeah, so that's kind of the best part, in my opinion, is you as the person investing in the franchise don't have to pay me anything. I am compensated by the franchisors as a independent broker. Basically, I close the deal, I get a referral commission from them. It does not affect the investment price at all. So if you just Googled it and found it, or you use me to find the business, exact same price point. It's just the franchise industry leverages independent brokers to scale their businesses, because it's the I get paid, then you get paid mentality. Once they get what they want, then I get what I want, and then the person buying gets what they want. So everybody's happy.
That's great.
Yep. So I skipped past the previous slide, but I transitioned into talking about converting your business into a franchise. So this is just some common pitfalls with a business trying to scale through franchising. Hiring the wrong professionals. Generally, I'm speaking about a lawyer here. Lawyers very rarely turn money down. So if you walk up to a lawyer and say, "Hey, can you write this document for me?" They're probably going to tell you yes, whether they are experts in the franchise space or not. And they'll write it, but there's a lot of nuance involved in pricing your business correctly, positioning it correctly in order to be competitive in the franchise sales space. It can be challenging to do, and if you make critical mistakes early on in your franchise agreement, it can really derail your business before you really even get it going, and have disgruntled franchisees and just crash the train early on. Another common pitfall is just simply underestimating the cost and commitment it takes. I hear people say things like, "Well, I want to franchise my business so I can have somebody else do the work." No, that's not what it's about. You're going to be working harder than you've ever worked, most likely. It's not about passing the buck along. It's about transitioning your business from whatever it was you did before to becoming a coach, supporter, and becoming a franchisor, which is fundamentally a different business model from what you were doing before. So it takes a lot of hiring of correct people, coaches, accountants, staff on your corporate team, and it takes money. So don't underestimate what it takes to be a quality franchisor, time-wise or financially. A lot of brands will focus on selling and not supporting. There's a term we use as consultants called SNO, which is sold not open, SNO, and that's what bad franchises do. Is they sell too quick. They see the money, they get a really great PowerPoint presentation, they get a really great closers on their team, and they just sell. I've watched brands sell 300 units in a year, and then you check up on them 2 years later and they got 25 open. So that means there's 200.
That's not a good thing, right?
No, not good at all.
That's not good at all.
No, because you have to scale responsibly in order to actually support all of these new fledgling entrepreneurs on their journey. So that's just one indicator I tell to buyers to watch out for is ask a company, how many have you sold? How many are open? If that ratio is too far askew, then that's a huge red flag. So, but that's a huge pitfall a lot of these brands make, is they just collect all those franchise fees up front and just sell, and they don't have the processes and the people in place to support it as they grow. The last problem here is a lack of a clear franchisee profile. You gotta be picky as a franchisor. You don't want to bring individuals into your organization who are a bad culture fit. If you just sell to anybody who can fog a mirror and can get a loan, you're going to get a lot of people in your system that don't really belong there. So I've found the best franchise systems scale at a responsible rate, and they attract people who resonate with the culture and who really are interested in investing in the brand and in scaling it and building a business in that brand. So if you got some person who's just not in line with your brand, it's better to fire them before you sell them the business, honestly. So I don't even know if and how much time are we in, Jake, just so I know?
I think you're doing good. We're about halfway through the program. I know Ayal is itching to talk to us over there too. So if you need a break, we can switch to him and come back. But I think you're on a roll. I'd say keep going. If you got another 10 minutes here or so, and then we'll switch over to Ayal and wrap it up. If anyone, I saw a couple more people join too. So just a reminder, if you do have questions, put them in that Q&A box. We'd love to answer those. And I'd say, yeah, another 10 minutes or so, Bryant, and we'll switch it over to Ayal. Will be great.
Right. Perfect. Yeah, so I'll definitely get this wrapped up. And so the franchising process, step by step, number one is really just evaluating if your business is franchise ready. And that term franchise ready it can mean quite a few different things. You as the owner have to be mentally ready to take on that challenge. You need to have enough systems in place in your current business operation where you can really stop working in your business day to day and focus 100% on building that franchise out. If you're still in the business flipping burgers or doing jobs, you're not ready. You got to really be able to scale yourself out of that operator role in your personal business. Financially, you need at least ideally 2 years of revenue, strong revenue in your business. You can show at least out of one location. You don't need more than one. A lot of people think they need 3, 4, 5 locations open before they can start franchising their business. You could have one restaurant or one massage parlor or whatever and start franchising from there, but you just need those processes and everything dialed in really well at that one location.
Bryant, because that was actually a question I had is like from a investor standpoint, is there one that looks better than the other? Like say one location that's doing revenue with a 40% profit margin, compared to a business with 3 different locations, maybe doing like a 15 or 20% profit margin. Is one better than the other in that case?
Yeah, anything, if you have one that's doing a 40% net, earnings before interest, tax, deductions, and amortization, like, yeah, I would prefer that because that's unicorn status, in my opinion, in small business getting to 40. So but it depends on if you can prove that this is repeatable in different markets. Which is tough to prove. I mean, you can do all the data research you want, but if there's any leap of faith in erroneous claim I see franchisors make, it's that because this business worked in, say, Chicago, it's going to work in Milwaukee,
Okay.
Tampa, Miami. But I don't know how much you guys travel, but just in the state of Florida alone, you go to Tampa, Orlando, and Miami, it's like you visited 3 different countries. It's a completely different,
That is
market.
very
So,
true.
right. So if you can prove that, oh, this is working in another market, like certainly going to help your sales case selling franchises. But I've seen brands start and scale and grow from just one. But having your processes dialed in, handbooks, coaching, everything is more important than already proving you can work in other markets. You just need to be able to prove there's a competitive advantage that franchisee has by investing with you versus doing it on their own. For example, a pasta di Gai, it's the recipes. You can't just go recreate that. That's their secret sauce, literally. Is in the recipes, the quality of the food, as well as the processes and acquiring things and hitting the right price point. But you see where I'm getting with that, though. You got to have that something.
Showing you can do it consistently in
Right.
one place is more important than, and the reason I asked that, I've had this myself personally years ago, or as an entrepreneur, for whatever reason, we think like the more locations I have, the better, and we were sort of opening offices and expanding and that sort of stuff. That's not necessarily so important from an investor or a franchisor standpoint as to having one singular location that's extremely well run, extremely well documented, and extremely profitable, is what it sounds like.
Right. Right. Yeah, that bottom line net revenue number is, or percent, you take in from the gross is critical. I mean, if you have 10 locations and they're all doing, 9% to the bottom line, that sucks, honestly. Like, I mean, you can do that, but once you take out 5, 6% gross, because think about it, you got to pay a royalty fee, which is 6, 7% gross. If you're only doing 10% and you're not paying any
There's
royalty,
no room.
what am I going to get out of that? That sucks. Like, so yeah, but if you can show like, hey, I'm doing 20%, which is the floor that I suggest, around there, not necessarily, but if a brand can show they're doing 20%, then like, all right, there's some meat on the bones. I can make some money in there. Even if I give them 6, 7%, I could still make some money if I'm doing 500,000 or whatever. So yeah, that's just how I tend to think about it. So drive that number as high as you can if you want to franchise your business so that you can prove that everybody's going to get paid after, not just you from taking the royalty. Then there's a lot of legal side to franchising your business. Franchise disclosure document is unique and independent in every state you operate in. You have to rewrite this thing every single year, no matter what, in every state you operate in. So it does turn into a sizable legal burden. Operations manuals are a given. You need those. Territory and fee structure, just designing how large a territory is, how much they're going to have to pay in royalty fees, marketing fees, technology fee, brand fees, things like that are important, which is why it helps working with quality professionals instead of a lawyer that doesn't really know a ton about franchising. And then there's brand assets, just logos, colors, design, stuff like that. Obviously have to be dialed in, look very professional. After you have all that together, you're really ready to launch and start selling. I mean, selling franchises is hard to do. They're not just gonna show up and buy one generally. So you got to really focus on how to scale, and support is the last part. Once you get it going, you start selling. If you don't support your franchisees and have these people find success early on, you're going to crash. Nobody's going to buy because they're going to talk to the existing franchisees. They're going to tell them the brand stinks and you're never going to sell another one. So you really need to focus on those first few franchisees being fantastic brand ambassadors for the brand, because they're the ones who really sell. Is when you sell too, but if you have your own franchisees undercutting your sales pitch, it's gonna destroy it.
That's a hard hill to climb, I would
Yeah.
assume.
Forget about it. You have to catch people not paying attention. But yeah, so I think that's pretty much it for my section.
Bryant, that was awesome. Thank you so much. I learned a ton. I took a whole bunch of notes. I'm sure we're gonna have some questions by the end. So if you do have questions, pop them in the Q&A. We'll give you a little break there. You are on a roll. We'll switch it over to Eyal. Yeah, there we go. We got to unmute you.
Yeah.
And Eyal, tell us a little bit. I know I did an intro in the beginning, but tell us a little bit about yourself. And then I got plenty of questions I want to dive into over here. So
Okay, so as you said in the beginning, I started on before I was 18. I had the ice cream place. Then I had the two restaurants in a country club when I was 21. And then I went to study computer science and my life changed. 40 years I was in tech, mainly in high-level positions, CEO, CFO, COO, things like that. And my son, Guy, also went to study engineering. But just before finishing engineering, all of a sudden he came and said, no, I want to cook. Okay.
there's a big difference there, right?
Yeah. Okay, so yeah. So he went actually to Cordon Bleu. I don't know if you know what it is. It's like the top level school, culinary school in the world in London. He studied there. He worked in Michelin star restaurants in Europe.
Cordon Bleu, is that called, you said?
Yeah, Le Cordon Bleu in France.
Okay, I've heard of that actually.
Yeah. It's like the number one culinary school in the world. There's one in Paris, one in London, and you know the instructors, they travel over the channel to between the two schools. Anyhow, so he went there. So he is like a top level chef. But when he wanted to open his own business after a few years of working, I suggested that he will come here and I'll help him. And that's what happened. This is how Pasta di Guy started. So our concept is to do top level Italian food, really top level. Like the recipes are top level. We do everything fresh. We buy the ingredients a few times a week. We make the sauces from scratch, the noodles. I mean, we almost 80% of our menu we make from scratch, and also we make it on the spot. So everything is really fresh. Like it's a level of higher than fine dining actually, and still you're able to buy a big pasta bowl that I cannot finish for about $11-12.
Oh, you're speaking my language. I love that.
Yeah, so that's the deal. I mean, you get like top level food, and you pay like you go to a really like a fast food chain. Right?
Beautiful. We could
Yeah.
talk about the food all day long, but tell
Yeah.
me a little bit about the brand. Tell me a little bit about the franchise model that you guys
Okay,
have.
so first of all, we have three corporate locations, two here in Tampa Bay, one in Indiana. The one in Indiana we opened to show to ourselves that we can franchise.
So
we
exactly
send-
what Bryant was talking about of your
Ex-
model may be fantastic in Tampa Bay, but up north is could be a completely
Exactly.
different
So we
story.
wanted to test with this, and also we wanted to test all our processes, all our training material, everything. So we took a 25-year-old girl that used to be a cashier here in Tampa. We relocated her to Indiana, Fort Wayne, and she opened the location.
Wow.
This
As
was like a year and a half ago.
general manager or
Yeah, she was the
operations
general
manager?
manager, but I mean, it was like a franchisee, but the only difference is that we pay her salary instead of her paying us royalty. But it was like, I mean, the whole process, because we wanted to test our process.
Because
And
you
only
had
after we did this, we said, okay, now we're ready to franchise. And we started franchising almost a year ago. We already sold two franchises, one in Spring Hill here and one in Virginia. Both of them are looking for locations now. So yeah, so this is where we are right now. I think what's unique about our franchising model, first of all, is the uniqueness of the product. There's no other thing like that in all the US. I travel a lot now because of franchising. There's nothing like that. Our profitability is pretty high. We are over 20%. So what's left for the
Great.
franchisee is around 17%, which in food is very, very high. In food, usually the percentage, the EBITDA is like one digit percent.
Very low, yeah. Restaurants, I can tell you from looking at, numerous sets of books and dozens of companies over the years of restaurants are the hardest to actually run from a profitability standpoint because there's so many moving parts, there's so many people, the labor, there's a lot going on there.
Yes, yeah, it's a complex business. It's a very complex business. I mean, I've been in many different businesses, high tech, advertising, service, through my years. Restaurant is the most complex one, but if you do it right, it's very rewarding, both financially and mentally.
I love what you said about you were able to take a 25-year-old who worked in the entry level position in one
Exactly.
restaurant because you have everything so organized. You're able to put them in a position to run a franchise. Why do you think franchising makes sense, and especially when it comes to restaurants?
Yeah, so as I was starting to say, I think restaurant is one of the most complex businesses in the world, I think, because it has everything. It has a product that that you have to change it all the time, the food, right? You have operations, you have marketing, you have sales, you have service, you have inventory control, which has to be very, very tight because there's a lot of, if you don't do it, there's a lot of waste in restaurants. So each one of the components of any company, first of all, it has all the components. Like a service company doesn't have usually inventory control, right? Or things like that. So you do have all parts of an organization, but it's a small business. Usually you will have a marketing manager, operations manager, product manager, right? Service manager. Here, everything is you. You maybe your two partners. You have to do everything, right? So this is why it's very difficult to succeed in restaurants. But if you have a good system, this is why I think restaurants it's not coincidence that most franchises are restaurants, because restaurant is, if you don't do it as a franchise, it's much, much, much more difficult. So this is why I think if you want to do a restaurant, franchising is the way.
That was going to be my next question. It's kind of twofold of, if somebody is thinking of getting into the restaurant business or any business, like when would it make sense to look at a franchise? And then from the other part of it, which Bryant was talking about, is, if you have a business that's running and successful, at what point should you consider going the franchise model?
Yeah. Well, first of all, if you want to, again, if you have a passion to have a restaurant, at the end, I think it's passion. Food is passion. It's not, I don't think if somebody would say, okay, I just want to have a business, what's the best business with the easiest work, the best reward? That's not restaurants.
Probably not a restaurant.
Yeah. Restaurant is if you have a
hardest.
passion, if you have passion to have a restaurant for the food, to entertain people, to see how they are happy,
For service, right?
service, or if you have this passion, then you should say, okay, then you should look for a good franchise, good restaurant franchise, and do it. Because if you're going to do it on your own, it's really, really tough. I mean, you can succeed, but it's very, very difficult. And then you have to choose somebody who is unique. What franchise? Somebody who is unique, high profitability, because in the beginning, you're not going to get, till you get to the profitability, it takes a year or two. So if you have 17%, so even in the beginning, still you're profitable. You don't get to the 17, but you're still profitable. So you can pay your bills and everything, right? So you have to look for somebody with double-digit profitability of the franchisee, something unique. And I think something that Brian said, which is very important, is support. I think the main thing you want the franchise is you want support. You want somebody who's going to support you. It has the systems, has the technology, has the ability to support you, and the willingness to support you. Okay, so by the way, some of the big companies, they have all the systems, but not always the will. Sometimes, because when it's a big company, so the franchisee, he deals with some employee that works in the company. He doesn't really work with somebody who's very willing and want to support him and help him, right? So that's one of the problems with the big ones. If it's too small franchisor, then maybe it doesn't have the systems, it doesn't have the knowledge, it doesn't have the processes. So you need to, I think the best thing is to look for something like middle, like us, somebody who have 5, 6, 7, 20. That's what I think. And if you like the concept, you like the people, this is what I would look for as a franchisee. And the good thing about that is once you open one, after a year and a half, you see it looks good, you can go and do another one. So
Yeah,
the
once you
whole
really
idea.
dial in that process, then you're ready to scale, right?
Exactly. So it's not just the franchisor. The franchisee also learns how to do his own business, his own processes, and then he can do another one, and grow, in his own pace.
Yeah. So
Yeah.
I love that you said that. Can we, not to go backwards, but maybe back up a little bit, can you talk a little bit about the timeline from when, because when you joined, was the idea to franchise the business, or talk a little bit about the timeline from when you decided, hey, we're going to pursue franchising, to like actually selling and opening your first
Okay.
franchise?
So first of all, in our case, we knew from the beginning that that's what we want to do, because the concept, the idea was my son wanted either to open like a fine dining restaurant, maybe even get to a Michelin restaurant, which is a totally different business, right? It's a business you put in one location, millions, and this was one concept. And I told him, no, let's not do this. Let's open something small that we can duplicate, and let's franchise it. So we knew it from the day one, by the way, that we want to do it. And by the way, we even started in 2019, we started in a food truck before
Oh,
we
okay.
even opened, just to test the concept, because he came from Europe, so the taste is different. You have to change and make some changes, when you come to the US. So we actually started for a year only in a food truck. It was part of the plan. 1 year food truck, see that it works. If it works, we continue. It did. So then we opened the first brick and mortar. After 2 years, the second. After a year and a half, the one in Indiana, and then we franchise. I mean, we had this plan from day one, actually. I don't think it's usually what happens, but this is what happened in our case.
Most people don't have a plan when they get
Yeah.
started. I say that in the nicest way possible, but I love what you said too about it's a different business. So if you wanted one fine dining restaurant, that's a completely different business model from what you guys are doing. The fact that
Exactly.
you knew that from the beginning, that's amazing.
Yeah. Yeah. Now, I think you also asked me about the franchising process
Yeah,
before.
so that was the timeline. So if I heard you correctly, it's about 5 years from when you started to when you officially
No.
sold your first franchise.
Yeah. No. So first of all, I mean, in the first years, we were concentrating on making the business work. First the food truck, then the first one, then the second one. And okay, then we spent about a year and a half just improving the processes and make them duplicable, because
Okay.
it's very different that when you run your own business and when you
Mm-hmm.
want somebody else to run your business.
Yep.
Like when you start and see it and start thinking, what are all the things that you're doing on the day to day? It's crazy, right? I mean, and then you have to say, okay, how, first of all, can I change this process to make it easier? Can I automate it maybe? I know, can I? So you have to, we worked a lot on making this duplicable.
Got it.
And so we changed the processes, we made some of it, we use technology to do some of it automatically. And of course, we wrote everything. So we have a user manual that tells everything. When the morning cooks comes into the restaurant, what he should do first. I mean, after he opens the door, it tells them exactly what to do, to what oven to go, what to open, what to close, what to look, everything. Even the dishwasher, even how to recruit somebody. Everything, we have everything uh, organized in the operations manual. So if somebody if you can have a robot just do what's in the operation manual, it's going to be a pasta di guy, right? But in
Nice.
reality, it's not going to be robots, it's going to be people. But we build it in this way that it's going to be something that it's really duplicable. So we worked like a year and a half on that. And
Okay.
after that, then we tested it in Indiana. After a few months that we saw it's working well, we said, okay, now we're going to start franchising. Then it takes 6 to 8 months from the time you really start working on it until you have the FDD, the franchise disclosure document, which is like a 200 pages document that explains, that each franchisor needs to have by law, and
Yep.
explains everything you do and all that. And only after that you can start marketing yourself as a franchisor. So
Nice.
so actually, I would say that about after we got the FDD, we sold the first one, I think 4 months after that.
Okay.
which is pretty quick, by the way. Usually it takes more time.
It is.
And so the first one and the second one, it took us another 3 or 4 months to sell the second one, and hopefully now we're close to sell 2 more.
There you go. That's fantastic. So, Eyal, thank you so much. I'll keep asking you questions here if nobody else has any, but I just want to say we got about 10 minutes left before we let these two go back about their day. So if anybody does have any questions, put them in that Q&A box. If not, I'll just keep asking you questions. Bryant, if you got any other closing thoughts in here, we'll get those in just a second too. Let me, and maybe this applies, maybe it doesn't, but I'd love to get your thoughts on, like, does artificial intelligence play any part of you guys' business now, Eyal, or is that not necessarily affecting the restaurant industry so much?
Well, for now, the first place we're trying to use AI is in recruiting new franchisees.
Really?
Actually,
So
yeah.
in
Like
your
to have
marketing
a
efforts?
system which uses AI to communicate. We get leads, let's say from Facebook, from people going into our website and all that. And it's difficult. You get, let's say, 10 people, 10 leads, and you can talk only with one. Because many things happen in the way. And then you talk with this one, and out of the 10 that you talk with, many disappear. So it's like a process. So we're trying to use some AI system that will help us improve the stats on this thing.
Nice. So for marketing
Yeah,
efforts and
yeah.
follow up, maybe
No,
like a drip
but yeah,
campaign.
in general, we use a lot of technology on other things, but not AI right now.
Got it. I would assume, maybe it could help with formatting menus or processes and operations and manuals and maybe redoing some of that stuff at some point, but who knows,
Maybe, yeah, maybe.
Nice.
Too early now.
Too early to tell. Well, I
Yeah.
love it. I want to get some of that food. It looks amazing. If anyone has any other questions, put them in the Q&A box there. If not, we'll stick around for a few more minutes here and then we'll end this thing up. Bryant, thank you so much. Eyal, thank you so much.
Thank
Bryant,
you.
do you have any final closing thoughts or anything else you wanted to reiterate there before we take this thing in for a landing?
Sure. Just focus on margins. I would say that about, especially if you're investing in an opportunity, like Eyal mentioned, they're pre-royalty, they're operating at over 20%, which I can't credit him and his son Guy enough for being able to present a affordable concept by its core is to bring high quality food at an affordable price. Bring the affordability while still protecting the owner's margins is certainly an impressive feat to pull off. And that's what I recommend people to look for is find concepts where there's enough money on the bones so you can run the business. People often, I could think back when I used to own a cell phone repair franchise, people would walk in and look around. They'd be like, wow, you must be rich because you have a business. And just people just fundamentally misunderstand how tough it is to get a dollar to the bottom line past the tax man and into your pocket. Like, so just focus on the money. It's about the community. It's about your personal growth. It's about lifestyle. But if you're not making money, all that's going to go away anyway. So just
All that
be,
other stuff's real hard to achieve if you're not making a profit at the end of the day, right?
you're never going to be happy because if you can't pay your bills, you're struggling, meet payroll, it sucks. Like you don't want to be there. So definitely think of investing in a business from a bookkeeper's point of view, from a profit and loss statement point of view. And if it passes that test, then you can start thinking about culture fits and does it fit your lifestyle and other things. But if it doesn't pass that first check on it's going to make me money, you just forget about it because you're never going to get to that other benefits that you're looking for out of the business.
I love it. I love it. Thank you so much, Bryant. Eyal, you have any closing thoughts for us here before we wrap things up?
Just want to invite the people from Tampa to come and eat in our places. We have one in Wesley Chapel and one in Trinity
Awesome.
in
Yeah,
this area.
we're definitely
Nothing
going to
in
try it out.
California so far. So for the California guys,
We had a couple people from California today, so not out there yet. But if they know
yeah,
anybody looking to
yeah,
franchise, you got everything set up and you're ready
right,
to expand out to the West Coast, it sounds like.
exactly.
Amazing. Well, this was great. I can't thank you guys enough. If nobody else has any questions, we'll end things up here and we'll talk to everybody soon. Thanks, Eyal. Thanks, Brian. Have a
Sure.
good day. Thanks, everybody
Sure.
that
It was a
joined us.
pleasure.